So we're going to go ahead and get started. You're probably wondering who's talking. My name is Jason Cobbs. I'm an account manager here in the Boulder, Colorado office, working on the Run and Train team. I've been with NPD for about 4 years now. And then today with me is Christine, and I'll let Christine introduce herself.
Hi everyone, this is Christine Bushjock. I'm also an account manager here in the Boulder office on our sports team, and I primarily work with our running and apparel clients, and I've been with the company for about 7 months now. Perfect.
So Christine and I are going to kind of tag team this presentation. She's going to talk a little bit more about apparel. I'm going to be looking at the footwear side of things, so you'll kind of hear both of our voices interspersed throughout the deck. Just wanted to quickly introduce ourselves. Our contact information is there, so write down our email addresses. It will be provided to you at the end of the presentation as well. So here's kind of our agenda for today. We are going to start out big picture. So NPD has the luxury of not only looking at specialty channels, but kind of looking at what's going on in the greater sports landscape into mass, department chain, and sporting goods. So we'll take a look at that. We're going to look at some of our consumer data, which talks about who's buying running shoes today and why they're buying running shoes. And then the majority of our presentation today is going to be focused on the run specialty channel. We're going to spend a lot of time talking about footwear, close with apparel, and then we're going to look ahead towards some of our thoughts that we're thinking about here in Colorado for the running space in 2016. And again, if there's time at the end remaining, we'd be happy to answer any questions that you do have. So here's kind of the landscape that we look at. So we're looking at kind of the sports channels that we track here at NPD. And on the left-hand side, there's the first 4 channels that you see are kind of our core specialty channels. So you have your outdoor online, cycling, and then we've highlighted the run specialty channel. And you can see, for the most part, the sports market is very healthy within the United States on the specialty side. Outdoor and outdoor online are being driven by some strong increases in the camping and cooler categories. The cycling space, up about 3%. That's being driven by a strong increase in transit fitness, commuting bikes. And then the run space, we see the run specialty channel, a smaller channel in terms of absolute volume, at about $850 million, down about 3%. And we'll talk about what categories are driving that and kind of our thoughts around why is the softness there in the run specialty channel. And then we do also track the athletic specialty sporting goods. So this is going to include retailers like REI, Sports Authority, Sports Chalet, along with other footwear-specific retailers like Foot Locker and Finish Line. That channel is the biggest channel that we track in the sports space at about $9 billion, and it's seen a pretty healthy increase of 5% year over year. So just wanted to quickly ground ourselves in the overall sports market and what we're seeing across a lot of our specialty channels here. As we transition to kind of the bigger picture, so this slide here, I'll walk through it briefly, looks at some data using our consumer panel. So this looks at every channel of distribution, be it mass, be it specialty. It really captures everything because it's based off of our consumer survey data. And what we have here is we have apparel on the left and footwear on the right. And we've highlighted both active wear and active footwear or athletic footwear. And what we can see here is that the active portions of both footwear and apparel are really driving the growth in each one of these categories. We look at activewear, a $43 billion market. It's up 16% year over year, and we're going to talk a lot about what's driving that performance later in the presentation. Athletic footwear, up 6%. That's twice as fast of a dollar growth as all other footwear. So strong growth in the athletic segments across both apparel and footwear, and we're going to continue to kind of break up this slide into what categories are driving this performance and what channels are driving this performance in a little bit later in the presentation. Another kind of cool thing that we look at with our consumer tracking service is we not only ask people where they bought things, but kind of what channel they purchased their items through. And this slide looks at a very similar breakout. We're now just looking at the active apparel and active footwear markets. but we're breaking it apart by brick and mortar versus online. And you can see here, the left-hand side of the chart is just overall absolute volume. So you can see here, we still see a majority of sales being sold through brick and mortar, both on the apparel side, which is that top bar, and the footwear side, which is the kind of third bar down. The majority of volume is still flowing through stores, but if you look on the right-hand side, we've highlighted what year-over-year dollar growth is looking like. And while stores are both up year-over-year in both footwear and apparel, the online space continues to outperform, and people continue to migrate towards that .com channel for both their footwear and their active apparel purchases. Again, we're working off of a pretty small base here, but you can see active apparel is up close to 30% online year-over-year, and athletic footwear, again, off of a small base, but still growing at double-digit paces where we saw in 2014. So we're going to continue to watch this. Christine's got some interesting stuff on the running purchases that we're going to walk through in a little bit as well. So with that, I'm going to pass it over to Christine and kind of talk about who's our running consumer today.
Great. So MPD, as Jason mentioned, along with our POS service, we also have a consumer panel where we're allowed to look at a lot of the demographic information behind these purchases. So we want to look at who is today's running consumer. And here's a snapshot of that consumer based on gender, ethnicity, age, and household income. And what we see is that today's running consumer is skewed towards women. 58% of buyers are women compared to 42% men. And the majority of this group are of white ethnicity, 60%. But we have seen the Hispanic segment grow over the past year, and that segment reached 22% share of the market in 2015. This group is skewed more heavily towards that 25 to 34-year-old age group. That's our millennial age group with 23% share, followed by the 35 to 44-year-old age group. And the 25 to 34 age group, while it does have the highest share, it also saw the highest growth in running footwear sales over the past year. So that's a really key age group for the running consumer. And lastly, their household income is skewed a bit more heavily towards the $100,000 to $149,000 income bracket. So the next question then to ask is, what matters most to this consumer when they're making their running footwear purchase? So not surprisingly, we see on the left that comfort and fit remain the most important factors that consumers consider when they're buying their running shoes. But what we have seen change over the past year is that durability, price, and whether the shoes are new and different now play a larger role in that purchase decision. And one aspect of this shift may be driven by that larger millennials age group that we saw on the previous slide. So Matt Powell, who is our industry expert, in one of his latest blogs, talks about the fact that millennials are not committed to one activity. They're looking for versatile, multi-purpose products, and also the fact that they seek items that are good enough for the activity in mind, as opposed to the boomers' desire to buy the best. So I think this idea of needing a versatile, multi-purpose product can impact how durable consumers want their running shoes to be, since they're not only putting their running shoes on to go out for a run, but then also continuing on to run errands and walk the dog and do other activities in them. And the idea of price playing a larger role makes sense in the fact that millennials are looking for that good enough. So they're more willing to look across channels and compare prices to find the lowest price for what they need. We've also seen average prices in some categories increasing over the past year, which could also play a factor in price becoming more important. And then lastly, the new and different aspect of running shoes is still less important than all of these other aspects of the purchase decision, but we have seen it play a larger role than it has in the past. And I think that could be driven by the athleisure trend, with people wearing athletic running footwear, not just for running, but in more social settings as well, which places a larger role in the aesthetics of those products. In terms of where consumers are buying their running shoes, similar to what Jason spoke about earlier in terms of total athletic apparel and footwear, we see that the online e-commerce channel here has grown significantly as well. So more consumers are buying their running shoes online. And you can see it's still smaller than the sporting goods and athletic specialty channels, but the e-commerce channel grew to double-digit share in 2015. So it's certainly a growing channel in the running footwear space. And with the growing importance of the e-commerce channel, we wanted to take some time then to compare consumers who are buying their running footwear online compared to those who are not buying online. So here again, we're looking based on our consumer data at the gender, ethnicity, age, and household income of those consumers who are buying their footwear online. In terms of gender, we see that it's still skewed towards the female consumer. However, the online shopper is much more likely to be male buying running shoes. It's also much more heavily skewed towards white ethnicity and that $100,000 to $149,000 income bracket. And what's also notable here is in terms of age. The 25 to 34 and 35 to 44 age groups make up over 50% of those online shoppers. So these are even more of a key age group on the online space.
Perfect. So that kind of gives you a big picture understanding of what's going on. I think as we start to talk about run specialty, we have our run specialty hat on a lot here, but it's important to kind of take that hat off and look at what's going on outside of the run specialty channel, and we'll start to see some of that in the following slides, because as we look at the run specialty consumer, they're not necessarily just shopping at run specialty. They're shopping at sporting goods, they're shopping at athletic footwear specialty. So the ability to look not only within the run specialty channel, but to take a step back and look at these consumers from a greater channel perspective really helps us to understand their buying patterns as it relates to run specialty. So now we're going to really focus on run specialty, looking at performance for 2015. We saw this at kind of the onset when we laid out a lot of the channels that we track, but overall the run specialty market was down 3%, or about $24 million in 2015. You can see here that's down about $50 million from its peak in 2013, where we were close to a $900 million channel. So over the last 2 years, you can see between 2013 to 14 and now to 2015, we've lost about $25 million in sales within the channel for each of those calendar years. On the unit side, units are down as well, down about 800,000 units, and we'll talk about what categories those are being driven from in a little while. But overall units down about 4%, about 21.4 million units for 2015, down from its peak, about 2 million units back in 2013. So just want to take a step back, look at the total run specialty market from a dollars and units perspective. As we talk about mix, so as you would expect, the majority of dollar sales that are coming out of the run specialty channel are driven from footwear. That was true in 2013, and that's true in 2015, where 78% of the volume is coming from footwear. Not a huge lot of shifts, so this slide, while is important to understand kind of the weight that footwear plays in the footwear or in the run specialty channel, there hasn't really been a dynamic shift of, are we selling more equipment today than we were 2 years ago? Is apparel more important today than it is 2 years ago? Overall, the mix is relatively consistent to what we saw in 2013. Now, we talked about at the onset that the run specialty was down $24 million over last year. And this kind of talks about where those declines are coming from. So the left-hand side is basically what we just looked at, which is dollar mix within the run specialty channel. So you can see footwear at close to 80% of the dollars, followed by apparel and equipment and accessories. What's important to note here is that if you look at the right-hand side, that is the contribution to the $24 million sales decline. So when we look at something like footwear that makes up 80% of the dollars sold, it's only driving about 20% of that $24 million decline. What we've highlighted here is apparel, and Christine's going to touch on apparel later in the presentation, but apparel only has about a 15% share of total run specialty, but it was down about $11 million over last year. That's about 45% of the total contribution was driven from apparel. So we're going to spend a little bit of time talking about apparel and how consumers are buying apparel today versus last year. And I think that's an important segment to focus on as well. When you break it apart by gender, we have men's in the green boxes for both footwear on the right-hand side and apparel on the left-hand side, and women's in the blue bars. And as Christine mentioned, using our consumer data, that also sells through in our point of sale data that women make up the majority of sales in both footwear and apparel. On the right-hand side, we can see here the declines year over year are pretty consistent by gender. Both men and women saw a similar decrease of about 1% in footwear. When we look at apparel, on the left-hand side here, we see that men at the top lost about $6 million, or 11%, about $50 million this year compared to $56 million in 2014. The women's segment continues to follow that same trend, just not to the same magnitude. Women's sales in apparel fell about 7%, down to about $53 million last year. So overall, it seems to be an apparel story, and we'll talk about that a little bit later as well, as far as what gender-specific categories are driving that. Let's start out with footwear. Again, it's the most important category to run specialty, driving about 80% of the business. So we'll spend a little bit of time talking about what is doing well in footwear and what categories are seeing a little bit of a lag. So this is run specialty again, looking at all the footwear categories that we track within the channel. Again, not a huge surprise here that running shoes make up 90% of the volume. They're down about $7 million year over year, which is indicated by the right-hand side of the chart. Important to note here that there are some categories within the footwear space that are seeing some sales increases year over year. So when we look at the insole category, insoles are up over $2 million versus 2014. Track and field is a strong category, as is walking. So while these are small bases when you look at the grand scheme of things within the run specialty channel, as brands, as manufacturers, it's important to kind of consider these secondary categories that are seeing some growth and maybe are worthwhile of some assortment within your stores, or worthwhile within some investigations within your brand and product teams as well. But again, the main story here is running down about $7 million over 2014. Here's kind of a trend. So we break that apart. We look at 2015, where we saw $603 million being sold in running shoes. That's down from $610 million last year, and down even more from its peak in 2013 of $616 million. So overall, running shoe sales fell about 1%, indicated by the bars on the left-hand side. Right-hand side is units. So units for running shoes remained fairly flat over the past 3 years. 2015 did see a pretty significant dip of about 300,000 less running shoes sold in 2015 than in 2014. The reason why dollars aren't being affected as much as units is because average price in the run specialty channel for shoes was up over 3% versus last year. And I think that's an important story to tell, and we're going to start to look at the average price story on the next couple of slides. So I'll lay out this chart for you, and then I'll kind of talk through what my thoughts are on it. So the left-hand axis is units, which corresponds to the green line. The right-hand axis is average selling price, which corresponds to the average selling price, or dark blue line. What we're seeing here is that the average selling price for running shoes in the run specialty channel peaked at $113 in 2015. That's the highest average price that we've ever tracked, dating back to 2012. At the same time, units are at their lowest point ever that we've tracked dating back to 2012. So if you look at that green line, at about $5.3 million or 5.3 million units, that has seen unit declines over the past 3 years. So an interesting story as we start to look at the difference between average selling price and units. And what got us thinking about kind of looking beyond the run specialty channel was we were wondering, is this same sort of scenario playing out in a channel like sporting goods. So we looked at the same type of chart for sporting goods. So again, this is running shoes now within the sporting goods channel, so your REIs, your Sports Authorities of the world. The running shoe story, we think, and based on this chart, is a little bit different within this channel. So we have the same units and average selling price metrics, but what we see here is that units within the sporting goods channel are the highest that we've ever tracked back to 2012. Average selling price, while it's lower, you can see here the absolute selling price of a running shoe at sporting goods is about $40 less than run specialty. It hasn't seen the sharp increase that we've seen within the run specialty space. So as we talk about consumers either migrating away from run specialty into the mass sporting goods channels, I think it's important to kind of look at this difference between what we're seeing in average selling price versus how that's affecting units sold within each channel. As we continue, and I think we look at run specialty in a vacuum sometimes, but it's important to see what's going on in the greater scheme of things. So this chart looks at the sporting goods channel and looks at running shoes. And NPD breaks running shoes into kind of two different categories. We have our performance running shoes, which is indicated by the green bar. That's going to be your very technical based running shoes. That's going to be your Adrenalines, your Ghosts of the world. You can see here the majority of running shoe dollars come from that performance running category. What we're seeing here in the sporting goods channel is the continued growth and continued share increases of what we call lifestyle running. So these are shoes similar to something like the Roshi Run or the SL Loop that are built kind of off of that running platform, but don't necessarily have all the bells and whistles, and therefore don't necessarily have the average selling prices associated with them as the technical running shoes. So when you look back in 2012, that lifestyle running shoe or those multifunctional running shoes only made up about 14% of the volume of the running category. As we look to where that has evolved to over the past 3 years, about 31% of all dollars sold within the running category are coming from that lifestyle running shoe. If we add in the next layer, so this is the same chart, we just added in the gray bar at the top, which is classic running, or what we'll call retro running. So these are shoes that are like the Air Max 90 or the Air Huarache from Nike. This continues to grow. When we look at the classic segment, that's continuing to see some very strong gains in the running space as well. So when we layer both classics and lifestyle onto what we consider performance running, you can see that share shift over the past 3 years. Where in 2012, about 80% of the volume was coming from performance running, that is down to only 57% in 2015. And if I had to put on and look at my magic 8-ball looking forward to 2016, I would anticipate that green bar continuing to shrink as more share is being driven by some of these more lifestyle or retro running categories. Now this is sporting goods. If I pulled this chart up for run specialty, it would be entirely green. It would be entirely performance-based, performance and technical-based. So just something to keep in mind as you start to think about what's going on outside of the run specialty channel. We're definitely seeing an evolution towards more of those classic and lifestyle running shoes. Now, is this just a one-year blip? This just looks at volume over the past 3 years. So while performance running, we've seen about a $500 million decline in performance running. Again, this is not looking at run specialty right now. This is looking at our mass channels. But important to look at the evolution of performance versus more of these casual running shoes. So performance running, again, 100% of that volume in run specialty is performance running shoes, down about $500 million. When you look at the evolution of lifestyle and classic running, while still small in the grand scheme of things, we saw their share mix continue to increase on the previous slides, and sales have increased between those two categories of over $1 billion over the last 3 years. So these shoes continue to be seen not only at the gym, but outside the gym as people start to migrate their running shoes into more of a lifestyle type of feel. So wanted to at least lay out what that looks like from our greater channel, because if we were just focusing on run specialty, we would just be looking at that blue line, and I don't think we'd get the whole story of the running space. Finally, migrating back to run specialty, looking at price points. So they're not in a natural or kind of consistent break here on the left-hand side. I tried to break them apart just kind of where the volume was flowing. So the left-hand side is just dollar unit distribution by price band. The right-hand side is year-over-year unit change, each of those in thousands. So I'll start out with the 100 to 109 bucket. You can see here that bucket was down about 600,000 units over 2014. So a pretty significant shift away from that 100 to 109 bucket. And it looks like it's going north. As we looked at the previous couple of slides, the average selling price was up 3% last year. You can see here that more shoes are being sold at 115 to 119. About 400,000 more units were sold within this price band versus last year. Again, not enough to make up for the declines that we saw in that $100 price band, but definitely offsetting some of them, which is why you see dollar sales only down about 1%, while unit sales are down about 4%. So again, natural breaks, not a whole lot of movement in some of the other price bands, but important to see where some of those key changes are year over year. And finally, just looking at some of the top sellers. So again, this is run specialty for the 12 months ending December of 2015. You can see here your top sellers, as you would expect, contain some of the top sellers we've seen in years past, from your Brooks Adrenaline 15, ASICS GT 2000, and you can look at the rest of the top 6. What's important to kind of note here is that if I had pulled the same slide for the sporting goods channel, out of the 6 styles that we would have seen, 3 of them would have been considered lifestyle shoes or running lifestyle shoes. So that has not only increased in volume, those shoes are making an impact within the top styles within that channel as well. So that's kind of our overview of the footwear space. We saw at the beginning that apparel was the largest contributor to that sales decline, so I'm going to have Christine kind of walk through what we saw in the run specialty channel for apparel in 2015.
Perfect. Thanks, Jason. Okay, so starting at just the high level total apparel sales in run specialty over the past few years, we saw that overall total apparel sales fell 7% in 2015, or about $12 million, and that was really driven by a units decline. We saw units were down 6.2% in 2015 compared to the levels that we saw in 2014. So when we compare this to the much larger apparel market in athletic specialty sporting goods, we saw that apparel sales declined in this channel as well. Units were down about 4% year over year. In terms of dollars, we saw that similar to footwear, an increase in average selling price here helped to keep dollar sales at just about 2% lower than they were a year ago. But if apparel sales were down in 2015 in both run specialty and this larger athletic specialty sporting goods channel, yet we saw earlier in our upfront slides that total athletic apparel sales in the U.S. have increased significantly in 2015, you may be asking, well, where is this growth coming from? And what we've seen is that there's been significant growth in channels outside of just run specialty and athletic specialty and sporting goods. So most notably here, we see that mass retailers have contributed significantly to the increase in activewear apparel market in 2015, followed by off-price retailers as well. So we're seeing other channels outside of our run specialty and athletic specialty are growing their activewear apparel sales, and that's really helping to increase that overall market. But if we look back to run specialty, and from a mix standpoint, look at what's selling through in this channel, we see similar to footwear, it's a similar balance between all of the top categories. Socks are still the most important. They move about 32% of dollars in the channel, followed by sweats and active bottoms. If we compare 2015 to 2013, we see some slight shifts, so socks and tops are now contributing a bit more to overall run specialty sales, while we have seen that smaller categories, including intimates, which is sports bras, as well as apparel accessories, which includes things like leg sleeves and hats and gloves, those smaller categories are contributing a bit less to total dollar sales in the run specialty space compared to a few years ago. And so when we break out these key categories in run specialty and look at their 2015 performance, we see that sales fell across the top selling categories versus year ago in 2015, but most significantly for total socks, which was down about $2 million versus last year. We also saw a similar decline in total sweats and active bottoms, also down $2 million. And lastly, the smaller category of apparel accessories was down about $3 million. So this shows us what's contributing to that overall apparel decline in the run specialty space. So next, I really want to focus on those two top categories, socks and active bottoms, and dig deeper to understand what's driving the declines in those categories. So starting with socks, and first just taking a step back and looking at the total U.S. market. So this again comes from our consumer tracking data and allows us to look across channels of distribution for the socks market. And we see that sock sales in 2015 declined across all channels of distribution versus year ago, with the one exception of the e-commerce channel. So this shows us that the decline in socks is not just isolated to run specialty. We are seeing that it's part of this much larger trend in the U.S. market in sock sales. With that said, if we do look within run specialty, I think there are two important trends in socks that we've seen over the past year. So first, when we're looking at the silhouettes of the type of socks that are selling through in the run specialty channel, that's the chart here on the left. We see that no-show socks, which is the largest segment in the channel, performed well year over year in 2015. The declines are really being driven by the ankle and quarter length socks, as well as the slightly lower low-cut socks. So not fully no-show, but the slightly higher low-cut socks. These are the two segments that we see are declining fastest in the run specialty channel over the past year. And secondly, on the right-hand side, we're looking at pack sizes, so how many socks are included in each pack being sold. We see that single pack socks have always had the largest share in run specialty, looking back to 2013, but we're seeing that even more so in 2015. So we've seen multi-pack socks, most significantly that 3-pack sock has declined at a faster rate, and therefore we're seeing single pack socks really have 95% share of the socks market in run specialty now. Okay, so next looking at the active bottoms category, when we look deeper into the decline seen in active bottoms, so here we have this category split out by men's and women's active pants and active shorts. We see that the declines are really being driven by women's active shorts, as well as both men's active shorts and active pants. The largest category, women's active pants, which is the top bar there, actually performed quite well in 2015. That category grew over $1 million versus 2014. And we'll talk a bit more about what's driving the growth there. But what we really see here is that the men's side, as we spoke about earlier, is declining at a faster rate. And what's also interesting here is the difference between women's active pants sales versus active short sales. So I wanted to dig into that aspect a bit more. And on the next slide, what I've laid out is the unit share of active pants in green versus active shorts in blue. And we have the men's side of the business on the left and the women's side of the business on the right. But basically what this is showing here is that we're seeing this trend emerging in run specialty where sales are shifting away from active shorts and towards active pants, especially for the women's side of the business. So if we look at the women's unit share, active pants had about 36% share of the total active bottoms market in 2012, and it now holds more than shorts at 51% in 2015. So this has been a trend that's emerging, and it doesn't show any signs of stopping in 2016 as well. So then with that women's active pants, which is the category within active bottoms that we saw grow over $1 million this past year, we wanted to then break it out by different price points that we've seen in run specialty. And what we're seeing is that the lower price points, so $50 and below, as well as the higher price points at $80 and above, are really contributing the most to the units increase in women's active pants in this channel. And I think one explanation could be the influence of the broader athleisure trend that we're seeing in the market, with women wearing active pants and active tights for many more activities than just working out. It could be that women are buying more at these lower price points for their non-running activities and then able to spend a bit more, $80 and above, for their true performance running tights. But something also that's important here is that it's not just the running pants that we're seeing growing in run specialty. We're also seeing pants that are intended for activities like yoga and Pilates are also growing significantly in this channel as well. And then lastly, to take a look then within each of these key categories and splitting out the total market compared to our compression apparel market to see how compression apparel performed in run specialty. And what we're seeing is that compression pants as well as compression socks have performed well compared to the total category, while compression shorts and compression shirts have experienced steeper declines in this market. I think the growth seen in compression pants aligns with the growth that we've seen in the total market and really lends itself to the popularity of the fitted compression tight among women, which is so popular. And the growth in compression socks is in part driven by more brands entering this space, more brands introducing compression type components to their socks. So for example, a compressed arch support we're seeing more often in the market, so that is contributing to that growth in the compression socks space of about 2% year over year. All right, so what we've discussed up until this part in the webinar, as you've seen, has really been focused on using dollars and units and average selling price to understand the performance of the run specialty space. Before we end, we also wanted to briefly talk about some other really powerful measures that we have available in our specialty channels that can help analyze other parts of your business in terms of assortment decisions and driving profit. So the first measure we'll talk about is called gross margin return on investment, or GMROI. So this is one of the measures we have available in our run specialty data that helps evaluate category, brand, and item level productivity to retailers. So the calculation is rolling year profit on sales divided by the average inventory dollars. But basically what it shows us is which categories that we're looking at here, but you can also look at brands and items, which are most productive at turning inventory into cash. So in run specialty, which is the data that we're looking at here, we see that insoles have a high GMROI. So what this means is that for every dollar that a retail invests in insoles, in insole inventory, they gain $5.50 back in gross margin. And similarly, we see just across categories in the run specialty space, we see that first aid, body care, socks, performance running shoes, and hands-on hydration systems all have a high gross margin return on investment for retailers. So in other words, these are highly productive categories in the run specialty space.
I think one kind of important note to make here, and it's a good one, is that performance running shoes, which drive about 80% of the business, have a GMROI above 1. So they're a profitable assortment category to continue to carry. What's kind of interesting to see, whether you're a brand or a retailer, would be to not only lay out different categories, but lay out your brand versus other brands within the category. And it really helps as you start to talk to retailers about merchandising decisions or share of shelf. If you can start to tell a good and powerful GMROI story, that goes a long way to getting that extra shelf space that's needed for your particular category. So as Christine mentioned, we're looking at category level information here, but we have this metric available down to the brand and to the item level as well. So I would encourage you to continue to use this and leverage it with your retail partners.
Another powerful measure to help evaluate assortment and to drive profit is margin percent, or the net profit per dollar sold. So this also helps to evaluate profitability, again, at the category, brand, and item level within our run specialty data. And it's calculated by dividing the net profit, or in other words, dollars sold minus cost of sales, divided by total dollars sold. And what this shows us in the run specialty channel, again, just a snapshot across categories to look at some high margin categories in the run specialty channel. We see similar categories that were productive in terms of GMROI that also have a high margin. So insoles, for example, have a margin of 59% in run specialty. We also see that socks, first aid body care, and headwear also have high margins in this space. One other category that you'll see pop here is performance walking shoes. So on the previous slide, we saw that performance running shoes, which again, as we know, is the bulk of the volume in this category and has a very high GMROI. But we see here that walking shoes actually have one of the highest margins in run specialty. And if you'll remember back, we did see that walking shoes, while a much smaller category in run specialty, did show year-over-year growth in 2015 as well. So that's just one example of how we can use all of these different measures, from dollars and units to GMROI and margin percent, to really evaluate the market and the assortment within a channel and within a brand compared to competitors, to understand what else we can be considering when stocking our shelves in run specialty.
I think, along with, to Christine's point, we spent the majority of our presentation today focusing on dollars, dollar share, units, unit share, and that's very important and should be considered in every decision that you make. We wanted to kind of bring in these advanced measures at the end just to kind of round out the story, because you can start to lose some of the, insoles, very small category in run specialty. It's growing, it has a high GMROI, it has a high margin. If you just looked at dollars and units, that story might be lost. So I would encourage you to not only look at GMROI and margins, but some other advanced measures that we have, like inventory turn, sell-through rates, and really put those all together and layer them in one big dashboard that kind of helps you tell that run specialty story, whether you're a retailer that's talking to brands or whether you're a brand talking to retailers. I think using those advanced measures provides that extra amount of leverage that's important as decisions are being made on both sides of the table. So we just wanted to introduce you to them today, but with the understanding that there's many more available within our data sets that kind of help to build out that story.
So with that, we'll wrap up just with a short summary. So overall, what we saw in terms of the big picture, the sports industry in the U.S. is very healthy, and we've seen growth in 2015. The running consumer, as we saw in terms of what's most important to them, we think they'll continue to look for that multifunctional footwear with that new and different uniqueness factor. And the run specialty channel in 2015 has seen challenges. So as we saw with the emergence of lifestyle and retro running, we've seen those markets grow, and consumers are shopping outside of the channel for their running needs as well.
So as we look forward to 2016, what are we thinking about here at NPD, and kind of what's going to be on our hot button list? And we almost made it through the whole presentation without seeing a color run picture, but didn't quite make it. So there's the color run, and we saved you the Tough Mudder experience for today. But looking ahead to 2016, kind of where our heads are at. It's an Olympic year. We have the Olympic trials for the marathon coming up on Saturday in Los Angeles. We traditionally see a good bump in the running space. So we have some strong U.S. runners that have not only appeal just to the core performance runner, but people like Kara Goucher and Meb who resonate beyond to that more social runner. So we're anticipating a good rebound in the run specialty channel as more people continue to focus on running as we gear up for the Olympics this late summer. Something we wanted to touch on here is two different points. So retail experience and collaboration. I don't think retail experience is anything new to the run specialty channel. It's really what differentiates run specialty from sporting goods, is the ability to talk to consumers, diagnose their stride, and provide that level of service that the sporting goods channel traditionally has not provided. So that will continue to be important into 2016 as well. Collaboration I wanted to spend a little bit of time on because that extends beyond the running space. So before I joined the sports team, I worked on-site at Best Buy. And Best Buy had gone through many years of bankruptcy talks, stock declines. Is the internet going to consume the Best Buy consumer? And what Best Buy decided to do was partner with their manufacturer partners and create that experience within the store. So if you walk into a Best Buy store today, you'll see a shop within a shop for Samsung and Microsoft. And that's what we kind of think is needed within the run specialty channel. And it's starting to make inroads. If you look at the Flatirons Running Company and the partnership that they have here in Boulder with New Balance, it's a one-stop shop where you can get everything from a coffee to a chiropractic appointment to a pair of running shoes. That collaboration between retailers and brands is going to become increasingly important in 2016 to start to differentiate yourself from that mass channel and start to drive consumers back into the run specialty space where they feel like they can get everything they need within one space and they feel like they're being taken care of. The last one, data, and more data. That one's not necessarily speaking to the wristbands and the heart rate monitors that have been in run specialty for quite a time now. What we're starting to see is the evolution of data into categories beyond your wrist or beyond your heart rate monitor. So we're going to start to see both Under Armour and Ultra are coming out with smart shoes in the next couple of months that will have chips embedded with them. We're going to start to see some smart fabric companies that have chips and technology embedded within the fabric that allows you to measure some of those metrics that traditionally have been measured by your wrist. So as we look to 2016, and I think this technology and the quantitative self business is going to become massive over the next 5, 10, 15 years, we're going to continue to watch that evolve. And the run specialty channel has usually been on the cutting edge of some of these technologies, and we'll start to see that when we see the smart shoes come in here in a couple of months. So those are our kind of key points for 2016. Obviously, there's going to be more that come up that are unanticipated as the year evolves, but that's kind of where our heads are at for the upcoming calendar year. I'll flash our contact information here so you have it. Again, this deck will be provided to you in both recorded and electronic form after this meeting. But definitely don't hesitate to reach out. You have both of our contact information here. If we're not the right person, we'll help find out who is and help to answer your questions. So we would encourage you to spend a little bit of time digesting the presentation, and then send us some questions. We would love to help answer them and collaborate with you on kind of what the best practices are and kind of help you guys look forward to 2016 as well. So with that, I'll move back, and then we'll answer some questions. I will make a quick call out that if you are a brand, you can obviously reach out to Christine or myself. The majority of our time is spent dealing with manufacturer partners. We do have a whole team, and we will add their names to this list that focus on the retailers. So the retail recruitment group has a whole team led by Maria Kelly on the sports side. So we'll provide their contact information if you do need it as well. So there's a little bit of differentiation, but if you do need to know who to contact, start with us and we'll help you find the right person. So we do have one question, and then we'll wrap up and we'll let you guys get on with your afternoon, but there's one question that came through.
Yep. So the question is, what's included in the apparel accessories category and what's driving the declines there? So in the apparel deep dive section, we did see that socks and sweats and active bottoms were the largest categories contributing to the declines. But we also saw that the apparel accessories category, again a smaller category, but facing significant declines in 2015. So what's included in there is handwear, so that's gloves and mittens, headwear, which includes headbands, beanies, caps, neck gaiters, and then also leg and arm sleeves. So that's what's included in that category. And in run specialty, we are seeing declines across all of those different subclasses within that category. But most significantly, what we've seen is in terms of compression sleeves, so those are leg and arm sleeves. In this category, we've seen a particular shift away from sleeves and towards compression socks. So we've seen a shift in units in that space. And in terms of handwear and headwear, this could likely be impacted by the warmer weather we've seen in 2015, as those are more geared towards cold weather running activities.
Great. Thanks, Christine. So again, you have our contact information. Be sure to look for an email from either myself or Christine in the next couple of days, maybe early next week, with a link to the presentation. And with that, we'll give you back 4 minutes of your afternoon, and have a great rest of your week and weekend. Thank you.